CrowdStrike has made a lot of headlines over the last 18 months. One of the biggest headlines they made was when they literally made the world crash, when they had a bad update to their software. That was really embarrassing for them. I'm glad that hasn't happened again for the sake of the planet. Now, this company, their market cap is $105 billion, dollars, almost the same amount as Palo Alto, but the company is about half the size of Palo Alto. That's something to point out. Forward P is 110. Their current year doesn't have a P because they're not making a profit this year. Analysts think there's a small discount available. Year to date, the stock's up 24%. That's pretty decent. That is beating the S&P. When we look at their growth rate, the growth rate is better than Palo Alto's, 26% versus about 15, 16%. But again, Palo Alto is twice as big. So when you grow 8 billion by 15%, you're adding about 1.2 billion of revenue, where when you grow 4 billion by about 25%, you're adding about 1 billion of revenue, about the same revenue add to the top line, but Palo Alto is bigger to begin with. Not to get too mixed up in the numbers, these are good numbers. They are decelerating their growth rate as they get bigger. Competition is heating up in the space, and they have to compete with more and more players that they become bigger, competing against Palo Alto, Microsoft, Google has a solution, even Amazon has cybersecurity services. So CrowdStrike and the rest of these guys, they have competition. It's not like they're left alone to do whatever they want. They have some pretty stiff competition. So 26% looks pretty good on the top line revenue. It shows that people like CrowdStrike software and more customers are taking it. Now we're dealing with free cash flow, I'll call it 1.1 billion. Palo Alto is at 3 billion. So Palo Alto has 3 times the cash flow. And again, their market caps are nearly the same. Gross margins, 74.48, about identical with Palo Alto. So these companies have similar characteristics, but you could start beginning to see some differences in the valuation of the companies. CrowdStrike gets a lot of benefits of this higher growth rate. Let's see what analysts are saying about the company. We've got 44 analysts covering this stock. The highest price target's $555 per share. The lowest at $275. Wow, that's pretty low. And consensus is that the stock is discounted by 8.47%. As we look at growth rates, these guys are expected to grow by the fiscal year that comes is going to grow at 21.83%, then 23 looks good. I'm going to use the earnings per share that we are in the current year at $3.59 in my valuation. The PEs are a little bit high. They're a little bit elevated.